The housing market still seeing nascent signs of recovery, but even when it comes to this rally that we've seen, we've hit the pause button in the last few weeks or so. Is it just a pause, or do you think what could actually trigger more momentum again?
Sure. So Yvonne, it's always good to be here. As you mentioned, I definitely have a positive view on MSCI China. I think it's definitely a pause. So market never goes straight line. So we have seen positive momentum from our international clients' feedbacks, and it's really the fundamental, which is the earning and a potentially PE multiple, would drive the market to go higher. But with some of the profit taking, the market has come up from the bottom 60%, right?
Yeah.
It is understandable.
It's gone from China's not investable to now the most crowded trade is long Chinese equities. What looks crowded to you now?
Well, if we look at the international investors holding, it's still underweight. So it came down from the bottom of 3% underweight towards the end of October to right now about 1.5%. So has gone up quite a bit, but it's still underweight in general. So in that sense, the liquidities, both from international investors and also potentially domestic investor, will continue to be very, very constructive.
What are you seeing in terms of investor positioning right now? What are they cutting? What are they adding?
Well, there's some profit taking in the earlier sort of reopening sectors, and then there are a lot more studies and research coming into the consumption place where will potentially really drive the growth of the economy. So we definitely see some of the debate around the EV sustainable space, and also our analysts are also calling for tech, internet, and the software space, which will potentially be having the tailwind from the self-sufficiency drive from China.
Yeah, so you said 15% earnings growth for A shares. Where is tech likely where you're going to see that earnings upside? What sectors are you focused on now?
Tech is definitely one of them, and we are also very much focusing on the tailwind potentially from the policy front. So the two sessions is coming well into March. There will be a lot of focus on whether there will be relaxation policies when it comes to consumptions. There are a lot of talk about getting more stimulus to the consumers, and then more platform and also property sector relaxation. So those are the things we're really focusing on.
I was talking to an analyst yesterday that said, if you get the housing market right in China, most of the trades will follow, right? When it comes to the energy sector, this whole reopening play as well. Is the housing market still that swing factor for you, whether China outperforms or not this year?
Well, it relates to about 25% in the peripheral industry for the economy. It is big, but there are other sectors into play as well. And you pointed out the housing data. So we are looking at the pivoting in terms of policy into the property developers, especially the private-owned companies. And then the next step we would hope is really drive that demand. So stabilize it and have that red line, but at the same time change the narrative to encourage the demand. So that will really help the sectors.
What do you see as potential risks as well? I mean, in the last week or so, all it took was a Chinese balloon to really weigh down this market in a quite substantial way. Are geopolitics still kind of the biggest risk, or what do you think?
So I think, as I mentioned, the key driver would be the three factors: the reopening, and a key growth driver was definitely one, the liquidity, but also the macro space. Yeah. So we would definitely look into how Fed and the global inflation come into play, and the geopolitical dynamic will continue to affect the sentiment, and we definitely see some of the recent corrections driven by the balloon and other single events. Yeah. But those are the things would definitely add volatility into the market.